going to talk about 8 ways that you can try to improve your score and how this can help you get the best deals for credit cards, mortgages and personal loans. If you're new to this channel, I'm Matt, I'm a finance consultant. I've spent over 8 years working for one of the top consulting companies in London. I now run my own company, and on this channel I talk all things personal finance. So let's get going. Firstly, what is a credit score? A credit score is a sign of how healthy your credit report is, and lenders will use it to check whether you're a reliable borrower. It can impact whether you get accepted for loans, mortgages and credit cards. Most of the top credit reference agencies, Equifax, Experian and TransUnion, have 4 or 5 categories for credit scores, ranging from excellent to poor. Each credit reference agency uses a different numerical scale to determine your credit score. However, you'll probably fall into one category with all of the agencies, since they all base your score on your financial history. So why is your credit score important? Your credit score plays a role in determining the interest rate and payment terms on mortgages and loans, and lenders will base the interest rate they charge on how risky they view you as a borrower. So while it may be possible to get a mortgage with bad debt, you're typically better off improving your score before you apply for a mortgage to qualify for good terms. This could save you thousands of pounds over the lifetime of the loan. You may be thinking, well, I know what my credit score is, but how can I improve it? I've got 8 ways to try to help you to do this. Firstly, try to make sure that you always pay your bills on time, as it shows on your records and demonstrates that you're able to make payments when you're supposed to. Lenders will use this information to assess your reliability to make payments to them on loans. Missing payments, having accounts sent to collections or filing bankruptcy could hurt your scores, and having a late payment history can stay on your records for a number of years. I know paying bills on time can be hard, particularly with the recent high inflation and increases to living expenses. A couple of tips for you. One is to set up direct debits for a few days after payday so you have the money in your bank account for when the direct debits are being taken out for your regular monthly bills. And if you do have any late payments, speak to your lender or provider and agree the plan to settle the payments over a fixed time period so it doesn't show as late on your records anymore. The second way to improve your credit score is to review your credit utilization. This is the percentage of your overall available credit limit that you're using, and the typical guidance is to keep this at or below 20 to 30%. So if your credit limit is £2,000 per month, that would mean spending no more than £400 to £600 each month on credit. To calculate this for your own personal circumstances, take your total available credit per month and divide it by the amount you spend on credit each month. If you're unable to reduce the amount of spend you make on credit, then one way to improve your utilization score is to ask for a higher credit limit from your credit provider. Importantly, you don't have to use it, but it can help to reduce your percentage credit utilization. Third is the length of credit history that you have. This includes the average age of all your credit accounts and the age of your oldest and newest accounts. Showing a good history over a long period of time with a bank shows stability. That doesn't mean you can't look for the best bank account to move to, but think about keeping a long-term account and then having another account which you switch to the best interest rate every so often. That way you don't lose the stability of having an account over the long term. The fourth point is to check your credit report for inconsistencies. You can view your credit report with Experian, Equifax and TransUnion. Ensure the history is accurate and consistent and shows things like the correct property addresses for the correct periods of your life. And review the information and look for any mistakes or errors. This is important because lenders will use this information to cross-check to any application that you make for credit. And if there are discrepancies in the information, this can result in your application being declined. Reviewing your credit report can also, in the worst case, identify fraud if someone's taken out credit in your name without you knowing about it. I had this a few years ago where a credit card had been taken out in my name by someone else, and I worked with the credit report agencies to correct this information and remove the incorrect credit card from my records. The other thing to watch out for is linked accounts. So if you've ever taken out anything with another person, such as a joint account, and you no longer need that account, then it's important to correct this information and give a notice of disassociation, as if the person you had a joint account with had a bad credit score, this could also impact your credit score as well. The fifth point is the credit mix that you have, and to use a credit card responsibly. This considers whether you're managing both installment accounts such as car loans, personal loans or mortgages, and also revolving accounts such as credit cards. Showing that you can manage both types of accounts responsibly generally helps your credit score. There are lots of benefits of using credit cards, such as protection on your purchases and cashback, but make sure you can pay it off each month and only spend within your means, for example on day-to-day food shopping and transport. This will help to build up your credit score. The sixth point is to avoid too many hard searches and to space out applications where possible. Hard searches are performed when you apply for credit and the company that you've applied to will check your credit report. For example, it could be an application for a mortgage, a credit card, or even a mobile phone. If you have too many hard searches, it can impact your credit score. Experian recommends no more than 1 or 2 hard searches every few months. So try to plan out any applications you intend to make so you can spread them out over a longer period of time and not have them all in one go. The seventh point is to register to vote. It's very simple to do as long as you're eligible to vote in the UK, and the reason why lenders look at this is that it confirms who you say you are and that you live at the address that you say that you do. Often if you're applying for a mortgage, this will be one of the criteria flagged if you've not registered to vote. So if you've not done it already, then I recommend doing it now. And finally, number 8, try Experian Boost to see if it can help to improve your credit score. Experian Boost takes into account regular payments like your monthly utility bills, your mobile phone contract, or TV subscriptions like Netflix, and it can help to show that you're able to manage your money. Not all lenders will take it into account, but it's an extra step which could get you those additional points that move you into the best credit score band possible. The key is to be aware of your credit score and the things that you can do to improve it, particularly before taking out a loan or line of credit so you can get the best deal possible. I hope this video has been helpful. Feel free to leave any questions in the comments and give the video a like and a subscribe, and I'll see you next time.